Talks are going on between bosses at Fujitsu's plant here in Manchester and staff after it was announced the Japanese firm is to lose 1,200 of its staff across the country. The news comes in the week. Figures show house prices have risen for the fourth month in a row. Perhaps one indicator the economy is beginning a recovery. Here to look at those stories and the rest of the business headlines is Kieran Maguire from the Manchester Metropolitan University Business School. Thank you very much for joining us this evening. Fujitsu's job losses there, clearly, that's obviously not good news and seems to be an indication that companies are still suffering, yet we are still being told that there are little signs we've maybe turned the corner.
That's right. Unemployment tends to tell us about what's been happening in the economy in the last 6 to 12 months, so it's based on history. Whereas what we're seeing from the stock market's looking forward, so the stock market's been booming whilst we've got this continuing problem with unemployment, which is going to continue for at least another 12 months.
When we do see house prices rising as we have done, is that an indicator that perhaps, you know, things are starting to improve? Because to the layperson watching all this, it can feel like mixed messages at times.
I think it is very mixed messages, but we're in a unique situation that interest rates have never been this low. So I think what people are now thinking, they're feeling slightly more confident about their ongoing prospects. More people are coming onto the housing market. But there's another big issue with housing, is that there's very few houses available. Because the house prices have gone down so severely, house owners are reluctant to put their houses on the market. So those that are on the market, people are willing to offer a little bit more from.
Where do you see house prices going as we move forward over the next few weeks, months?
For the rest of the year, they'll probably continue to rise very, very slowly. The big issue, James, as I see it, is that when interest rates start to rise again, that could stall the market. Now, we're likely to keep interest rates at 0.5% at least for the rest of 2009 and perhaps the first quarter of 2010. But after that, I think we'd expect a reasonably swift increase. We can't sustain 0.5% interest rates for a long period.
Going back to what we're seeing happening to the Fujitsu staff, obviously it's an incredibly worrying time for them. And they're not the only company that are still making job losses. So if it is going to take a while for any recovery to start filtering through, do you see more pain for more businesses having to start laying staff off before things get better?
Yes, because what a lot of businesses have been doing is that rather than lay staff off, they've been asking staff to work short time in the hope that they could just survive through the recession. Now, if the recession goes on for any longer than is anticipated, then there's going to be continuing rises in unemployment. The latest predictions is it's going to continue to rise from around about the current 2.6 million to around about 3.2 to 3.4, probably by this time next year.
It's interesting that you mentioned that businesses are trying anything they can to avoid laying off staff. Obviously, it's a last resort. I think Fujitsu had tried some different ways of working. Clearly, they're still needing to get rid of staff. But what can businesses be doing to try to ease their way through this?
Well, a lot of the professional firms in Manchester, they realised that the last time there was a recession, it took a long time for them to skill up when the recession ended. So therefore, what they've asked their staff to do is to share some of the pain. And some of the accountancy firms, for example, they've told all of their staff to work a 4-day week, and therefore rather than any redundancies. And I think the attitude of many people who are in employment is that they'd rather have 4/5 of a job than no job at all. So therefore, that's one approach. There is still a massive skills shortages in the UK. The latest estimates that came out yesterday put the fact that there's around about 600,000 skill shortages in the UK in terms of jobs which are available, and we're waiting people to come in. And that's why there's still a big influx of people from the rest of the EU into the UK.
OK, Kieran Maguire, thank you very much for joining us to talk through those things. Fascinating insight as always.